we are diving straight into the action with Redwood Materials. The company has just made a major move by bringing in former Tesla finance chief Deepak Ahuja as its new chief financial officer, joining an executive team that includes former Tesla CTO J.B. Straubel and former Powertrain Vice President Colin Campbell. Despite this powerhouse lineup, Ahuja is sounding a note of caution, telling Channel YouTube that it is simply too early to discuss an initial public offering for Redwood Materials right now. We break down what this means for their massive valuation and what investors are actually looking for before they jump into the IPO hype.
Here's a simple way to protect your phone without stress. This ALEN 3-pack comes with tempered glass screen protectors, camera lens protectors, and an installation frame for an easier, cleaner fit. It's clear, case-friendly, and built to help guard against scratches and everyday bumps. Check the link in the comments to get it on Amazon.
Next up, we look at the massive valuation surrounding Tesla's future ambitions. Piper Sandler has just updated its detailed valuation model for Tesla, concluding that at current share prices around $400 to $420, investors are essentially acquiring the company's ambitious Optimus humanoid robot project at no extra cost. Analyst Alexander Potter suggests that the robot program combined with inference services could be worth more than Tesla's other businesses combined, setting the stage for a massive shift in how we value the company. We shift focus to the ongoing developments at Tesla itself. Tesla has officially confirmed that early vehicles with the Autopilot Hardware 3, or HW3, will not be capable of unsupervised full self-driving, replacing the free upgrade promise with a discounted trade-in program. Meanwhile, the company is pushing forward with a V14 Lite software update for HW3 owners and has expanded its unsupervised robotaxi service to 2 new cities in Dallas and Houston, signaling a deliberate push into autonomous deployment. Finally, we look beyond Tesla and into where the real growth is happening. Forget Tesla for a moment, because the motley fool is telling investors to look elsewhere, suggesting they should instead buy Alphabet stock. Alphabet's driverless care business is growing rapidly, and we explore why this tech disruptor is positioned to surge in the coming market boom. Stay with us to see what else is moving in this market. Redwood Materials has appointed Deepak Ahuja, the former chief finance and business officer of Zipline and a familiar face to former Tesla executives, as its new chief financial officer. Ahuja joins an executive team that includes J.B. Straubel, Redwood's founder and CEO, and Colin Campbell, Redwood's CTO, among other former Tesla personnel. Despite the high-profile IPO market surrounding AI data centers, Ahuja cautioned that it is too early to discuss a public offering for the company. He stated that an IPO is a potential future outcome and will be addressed when the timing is right. Ahuja's perspective is bolstered by the company's strong existing investor base, noting that Redwood has secured significant funding, including a $425 million Series E round in January that boosted its capital, raised to over $2 billion, and its valuation passed $6 billion, and the inclusion of Google's and NVIDIA's venture arm in its capitalization table. Redwood has, I'd say, the creme de la creme of investors already, who do have deep pockets, Ahuja commented, adding that while existing investors will fund based on excitement, he anticipates new investors will be equally enthusiastic about Redwood's work in energy storage and recycling. The CFO's appointment comes amid organizational changes at Redwood Materials, as the company recently lost its chief operating officer and several vice presidents amidst a restructuring that impacted about 10% of the workforce. The company is currently shifting resources toward its growing energy storage business. Ahuja expressed excitement about the company's innovative technology solutions addressing climate and energy needs. He emphasized that the convergence of the energy storage and recycling businesses felt like a natural fit, given the critical societal needs they address. Addressing the broader AI hype cycle, Ahuja noted that while Redwood's energy storage business targets powering AI data centers, he remains mindful of market exuberance. Drawing parallels to past cycles of hype and disillusionment seen in the industry, He stated that the company will be conscious of how it messages, manages, and grows, viewing the hardware focus as bringing a degree of sanity compared to software-focused AI companies. Top Wall Street firm Piper Sandler has issued a bullish assessment of Tesla, suggesting that investors are effectively acquiring the company's ambitious Optimus humanoid robot project at no additional cost at current share prices. In their updated valuation model, analyst Alexander Potter concluded that at share prices between $400 and $420, investors can purchase Optimus for free. This analysis, detailed in their Definitive Guide to Investing in Tesla, values Tesla's core businesses, including electric vehicles, energy storage, full self-driving (FSD), software, insurance, supercharging, and a robotaxi operation, at approximately $400 per share, excluding any valuation for Optimus or related inference-as-a-service opportunities. Piper Sandler maintained an overweight rating and a $500 price target, implying a conservative estimate of roughly $100 per share attributed to robot-related businesses. The updated model incorporates granular forecasts for Tesla's insurance operations, supercharger revenue, a distinct robotaxi valuation separate from FSD licensing, and Tesla's 2025 CEO compensation plan. While Potter noted that 2026 and 2027 estimates fall below Wall Street consensus due to factors like declining deliveries, he expressed optimism that the Optimus program, combined with inference services, could be worth more than Tesla's other businesses combined, though formal long-term forecasts are pending. Recent trading near the $400 mark reflects investor focus on autonomy and robotics. Separately, Tesla confirmed that vehicles equipped with Autopilot Hardware 3 HW3 will not operate unsupervised, replacing the free upgrade promise with a discounted trade-in for legacy owners. Tesla has also announced a V14 Lite software update for HW3 vehicles in late June and targeted unsupervised FSD for Q4 2026, with a gradual rollout beginning in Dallas and Houston. The company is actively expanding its robotaxi service to new U.S. cities and plans for robotaxi-exclusive supercharger stalls in Florida, Nevada, and Arizona. Investor focus during recent earnings calls is heavily centered on the robotaxi program, the Roadster unveiling, and the global expansion of full self-driving. The Optimus project remains a key area of high expectation, with investors closely watching for the next Gen 3 unveiling date. Tesla shares experienced a notable surge on Monday, trading up 3.9% to reach a high of $449.16 and closing at $444.915. Midday trading saw significant activity, with approximately 77.66 million shares traded, marking a 23% increase over the average daily volume. This follows a previous closing price of $428.35. The company is navigating a complex landscape of analyst opinions. Research coverage has been mixed, with various firms issuing differing ratings. Tigris Financial assumed coverage on Monday, April 27th, setting a buy rating. Morgan Stanley maintained an equal weight rating with a target price of $415 on January 29th. Conversely, China Renaissance reduced its target price to $372 and set a hold rating on April 27th, while Robert W. Baird set an outperform rating with a target price of $522 on April 24th. Wells Fargo & Company issued an underweight rating, reducing its target price to $125 on January 29th. Overall, among the tracked analysts, 19 have rated the stock a buy, 17 a hold, and 5 a sell. Data from channel YouTube.com indicates that Tesla currently holds an average rating of hold and an average target price of $398.42. Financially, Tesla's recent quarterly earnings report, released on April 23rd, showed an earnings per share of 41 cents, slightly exceeding the consensus estimate of 39 cents. Revenue reached $22.39 billion, up 15.8% year-over-year, though it fell slightly short of analyst expectations of $22.96 billion. The company reported a net margin of 3.95% and a return on equity of 4.89%. Analysts project Tesla to post $1.25 EPS for the current year. In insider activity, CFO Vaibhav Tanja sold 2,264 shares on March 6th, and Director Kathleen Wilson-Thompson sold 26,409 shares on April 30th, executed under prearranged trading plans. Over the last 90 days, insiders sold a total of 80,213 shares, representing 19.9% of the company's stock ownership. Institutional investor activity shows varied movements. Hedge funds and other institutions have engaged in both buying and selling, with Manning and Napier Advisors, LLC acquiring a new stake in the third quarter. Currently, hedge funds and institutional investors collectively hold 66.2% of the stock. Tesla, Inc., founded in 2003, is a vertically integrated company focused on electric vehicles, energy generation, and energy storage, driven by its mission to accelerate the transition to sustainable energy. Market metrics show the stock's 50-day moving average at $382.66 and the 200-day moving average at $418.37. The company maintains a market capitalization of $1.67 trillion, with a price-to-earnings ratio of 408.18 and a beta of 1.79. Investors are being urged to look beyond Tesla and consider Alphabet stock, according to recent analysis from the Motley Fool. The report highlights the significant growth trajectory of Alphabet's driverless care business as a key driver for investor interest. Alphabet's stock prices, specifically GOOG at 2.62% and GOOGL at 2.98%, were referenced in the context of this investment recommendation. The rapid expansion in the driverless care sector appears to be a major factor fueling optimism surrounding the company's future performance. These stock prices reflect the afternoon closing figures from May 8, 2026, with the accompanying video published on May 10, 2026.